Assalamualaikum warahmatullahi wabarakatuh. Today we're going to present about stock and market analysis. Our group members are Muhammad Shafiq bin Mahidin, Nur Aliyah Maisara Abdul Karim, Nurul Akma binti Abdul Ghani, and Shafiqah binti Sa'id. We are from JBC 2514G. The company we have choose are TRC Synergy, Hohab Construction, Zilan Berhad, and Edson Berhad. First, let's see the GDP performance of Malaysia. Based on the chart, we can see GDP value is increasing from 2017 to 2019. In 2017, this performance was supported by a better growth recorded by most states in Malaysia. The most growth was driven by the increase in manufacturing and services as well as rebound in the agriculture sector. Now, we're going to see the balance of payment. In 2017, the value is 9.6 billion, higher compared to 2018, only 7.625 billion. However, in 2019, the amount is increasing by 12.45 billion. This means that the balance of payment surplus of Malaysia is exports more than its import. It provides enough capital to pay for all domestic production. Malaysia might even lend outside its borders.
Unemployment rate can be defined as the OECD give the numbers of persons unemployed to the percentage for the labor force. As the figure shows that the highest of the unemployment rate is consist by the year 2017, which is 3.4%, and having the changes of the negative 0.72%, followed by the 2018 and also 2019, both of the year giving the same of the value percentage for the unemployment rate, which is 3.3%, but they have a different of the changes. For the 2018, even though the value of the unemployment rate is 3.3%, it consists the changes as the negative 2.92%, and for the 2019, the changes is the negative 1.50%. It can conclude that the highest of the unemployment rate is goes to the 2017 of the year, and the others is equal. Inflation can be measured by the consumer price index that reflects the annual percentage change. On the bar chart, it shows the 2017 having the highest of the inflation rate value percentage, which is 3.8%, and the changes on that year is the 83%. On the 2018, it shows the decrease pattern as the value of percentage is 1%, and having the changes of the negative 74.49%. Otherwise, for the 2019, the percentage of the inflation rate is 0.7%, that more decrease as before, and the by change as the 31.58%.
For the market performance, we can see that the FBM KLCI is in a healthy growth after recovered from the post-COVID-19 crisis. Currently, the market is at 1,636.69 point, and we can say that the stock market is in a good condition. We agreed to invest in uh, construction sector. As we know, on 2020, when the COVID-19 comes, every sector has affected. One of the worst affected sector is construction, but that is 2020. In 2021, the Ministry of Finance has forecasted that the most growing sector will be construction, as in 2021 there is a lot of future projects, project that the ministry has forecasted to have, and then it forecasted that construction sector will have 13.9 percent of changes on 2021, and we can say that the best uh, the best sector that we will look for future is sector.
We move to the sector that contributes to the GDP. As the fourth company that we have choose is under the construction industry, we have analyzed the contribution of the construction industry into the Malaysia GDP. So as the bar chart shows that on 2017, the construction contribute into the GDP Malaysia is little bit decrease as the 16,431 million compared to the 2018. The construction is contribute the highest on that year, which is 17,204 million compared to the previous year. But on 2019, it only contains 16,963 million that the sector of the construction industry contribute to the GDP Malaysia. It can conclude that on the year 2018 and also 2019, it shows that in good condition that the sector of the construction still contribute the highest into the GDP of Malaysia.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Akmal binti Abdul Ghani. Okay, let me move to the sales of this company. The first one is TRC Synergy has recorded 848.79 million for HOHAB, 371.37 million ringgit for adjacents, 122.27 million ringgit, and the last one is Zealand recorded 80.77 million ringgit. We can say that TRC Synergy has the highest sales compared to others company. Next, for market capitalizations, HOHAB company has the highest amount, which is 179.387 million ringgit. The second one is TRC Synergy with 160.967 million of market capitalizations, and the third one is Adjacent has recorded 130.165 million ringgit, and the last one is Zealand BHD also recorded 84.492 million ringgit.
First company that we're going to analyze is TRC Synergy. TRC Synergy Berhad is an investment holding company that involves in construction sector. On both asset structure and final structure, we can see that both chart is increasing, is growing. That means this company is also growing. Next, we move to ratio analysis. We can see we focus on profitability ratio first. We can see that ROA and ROE ratio, return on asset and return on equity ratio, are slowing down. That's bad. That's a not good sign, as the return on both ratio are slowing down. On asset management ratio, we can see that they are declining on total asset turnover ratio and inventory turnover ratio, and that's we see that the asset management is slowing down except for account receivable turnover ratio, and we can see that this company has growth in terms of its current asset of account receivable. On capital structure ratio, we can see that the TRC Synergy Berhad is increasing their debt year by year between 2017 to 2019, and on this ratio we can see that this company has growing their debt compared to their assets, and we can say that this company's debt is growing. For stock market ratio, you can see the earning per share is declining, but it still have a positive EPS, positive earning per share. And also we can see that this company also provide dividend, and the dividend yield is increasing, but the dividend per share is just uh, have a slight decrease on the year of 2019. Next, we move to technical analysis, and we can see on the chart it has broke the support line of zero point 0.4 due to the pandemic of COVID-19, and now it's making the lower high. And if the chart can break the current resistance of zero point 0.4, we opine that this stock may go up until the previous high, that it can achieve the price of 0.86 by using the indicator of moving average and RSI, relative strength index. On the moving average, the current move, you can see that the moving average is showing the sell signal. Probably it may go down. On the relative strength index indicator, we can see that on December of 2020 it has already hit the overbought price, and now it's going down. Probably the stock is may going down by using these two indicators.
Now, let's move to Ho Hop Construction Company. Ho Hop Construction Company was co-founded in 1960 by Mr. Low Chi. It has grown to become one of the largest companies in construction and related services in Malaysia. As a market leader in Malaysia, Ho Hop Construction Company brings together a comprehensive range of capabilities in building, civil engineering, specialized intelligence, trading, and related services. Ho Hop Construction Company, also known as the company with a very comprehensive fleet of light and heavy moderate construction equipment. The example of the company project of Ho Hop Company is Camp Askar Johor and Iraq Al Zuruk, which is water treatment. Now we're going to see the performance of Ho Hop Construction for fundamental analysis. For asset structure of Ho Hop Construction, we can see that each of chart are increasing from 2017 to 2019. This is because in 2019, Ho Hop Construction's project progressed steadily and property sales improved. As their business grew, so did the EES component of Ho Hop operations. For the financial structure of Ho Hop Construction, for current liabilities and equities, it shows the value of increasing, while for non-current liabilities, it remains steadily. Ho Hop Construction use a lower financial cost translates to increased affordability for potential buyers. Now, we're going to see ratio analysis performance for Ho Hop Construction. Let's see one by one. For the first one is profitability ratio. Ho Hop Construction Company shows an improvement in 2019 in its return on asset, which was increased by 1.35% in 2019. In comparison with the previous year, its return on asset shows a slightly decrease, which was 2.6% in 2018. Ho Hop is improving in its return on assets. The higher the percentage rate in 2019, thus the company has the better performance. As we can see in the figure, the highest amount of return on equity was 11.93%, which was in 2019. For 2018, it indicates that the firm merged to generate 7.77 over 100, which is RM 0.0777 per 1 ringgit of equity provided by the shareholders. For return on equity in 2019 was 193 for 1 ringgit only. Moving on to asset management ratio, Ho Hub computes 0.28 times of total asset turnover in 2019, which is higher compared to in 2018 and 2017, which is only 0.24 and 0.14 times. It shows that in 2019, the company is using its asset efficiently. We can see that trend of inventory turnover ratio are climbing throughout the year until achieve 0.73 times in 2019, which is the higher. To sum up, this is good as the ratio are not exceeds 1 ringgit. This company make lower return using its inventory. Account receivable turnover for HoHub is only half value on 2018. In 2018, the company computes 1.35 times as compared to in 2019 and 2017. The company computes 0 time. It shows that the company can receive cash in a short periods of time. Besides that, the lowest average collections periods is good. This is because it shows that the company has a well-received produce in cash and customers paying on time. Let's see the performance of capital structure ratio. In 2019, the company has lower debt to asset, which was only 28.52% compared to 2018, which was 35.12%, and 2017 is 34.17%. For the year 2019, it is good for the company because the lower debt to asset is considered a good debt ratio. In 2017, it shows the lowest total debt to equity, which is 0.63% compared to 2018, and 2017 shares the same amount with 0.67%. This means Ho Construction Company debt is still in good condition. In 2018, Ho obtained 0.52 times, which is higher than 2019 with 0.4 times. This is proof that the company's assets are financed through debt. For time interest earned for Ho in 2018 is higher compared to 2019. This is proven that in 2018, the company can meet its interest obligations because earnings are significantly greater than annual interest obligations. Last for performance of ratio analysis is we're going to see in terms of stock market ratio. Based on the figure, it shows in 2017's earning per share is 0.11, while the lowest is in 2018 with 0.08, and the highest is in 2019 with 0.14. In 2019, it shows a higher EPS indicates that then the company is more profitability and has more profit to distribute to shareholders. Now, we're going to see in terms of technical analysis. For the first one is support and resistance. Currently, the support and the resistance of this stock is between 0.365 and INV555. If the price managed to break the current resistance level, it might surge to the next range of supports and resistance. The highest level it may go is on the price of RM0.905, which on the resistance number 4. It is possible if the price would break the resistance number 4. Conversely, if the price managed to break the support, it may go to RM0.255. That is the lowest support level ever recorded due to the economic crisis of COVID-19. The price may break the support number 2 if there is a strong catalyst that may make the price slope down. Now, let's see in terms of indicator. The first one, in weekly chart using moving average indicator, Ho Hub Constructions Company shows a buy signals on 13 April 2020 in the green circle. However, on the 4th January 2021, the indicator shows selling signal. So, our prediction for this stock is the price are going down as the major trend line of this stock are downtrend. The second indicator is Relative Strength Index, which is RSI. We can see that the indicator already hit the overbought line. This also may lead the price to going down as well.
Okay, let we move to the Zealand BHD company background. Their main activity are engineering and constructions, asset and facilities management, and property and development. They also focus on engineering and constructions projects and public-private partnerships projects, especially in Malaysia. They also have a few projects, which is Sungai Besi Ulu Kelang Elevated Highway. The second one is Drawbridge, Terengganu, Malaysia, and the last one is Centre of Foundation Study of IIUM, Malaysia. Okay, now let me move to their fundamental analysis. The first one is asset structure. In current asset, it shows an increasing in 2009, 2017, 2018, but it started to decrease in 2019 with the amount 96.69 million ringgit. For non-current asset, it showed a decrease in 2019 with 705.16 million ringgit. For their financial structure, their current liability show an increasing in 2018, but it slightly decreased in 2019. And non-current liability shows increasing value in 2019 with 512.47 million ringgit. The last one is for equity. It showed an decreasing in 2018 but starting to rebound back in 2019. Okay, next, let me move to their ratio analysis. The first one, we calculate their profitability ratio. Return on asset show an increasing value compared to 2017 and 2018. It means that they still can generate from the available asset and asset invested. The next one, for return on equity, show an increasing value in 2019 with the value 5.67%. It means that they can generate profit from all their equity. Okay, the second one is we calculate their asset management ratio. The first one is total asset turnover. This company show increasing value but still not able to generate more than 1 ringgit profit from every 1 ringgit times of their total asset turnover ratio. Next, we move to their inventory turnover. They show increasing value in 2018 and start to decrease in 2019. They don't have better sales and tighter management control. And last one, in asset management ratio, we calculate their account receivable turnover in 2017 to 2018, they show a decreasing value but start to increase in 2019 with 0.96 times. On 2019, they get the receivable 0.96 times a year. The third ratio we calculate is capital structure ratio. The first one is debt to asset ratio. This company show an increasing from 62.84% to 68.31% in debt to asset ratio. The second one is total debt to total equity ratio. From 2017 to 2018, it show an increasing value but start to decrease in 2019. Even they get a decrease in 2019, but they still have a large percentage in 2019. The third one is long-term debt to total equity. It show an increasing up to 1,087.82% in 2019. The last one is time in trend years. In 2019, they get a negative amount which is negative 0.44 times. To sum up, this company bear greater levels of debt, and this company also not in good positions to continue making payment of their interest obligations. The last one is stock market ratio. In 2017 to 2018, it showed a negative amount in earning per share. But in 2019, it showed the company gain 0.32 cents net profit for each ordinary share for this period. Okay, next, we move to their technical analysis. The first one is support and resistance. The current support and resistance are at 0.07 and 0.105 ringgit. If the price manage to break the current resistance, the highest price of this stock will go on 0.175 in the resistance 2. Otherwise, if the price manage to break the support line, it will go to 0.025 cents. Okay, next, we move to their technical analysis. The first one is support and resistance. The current support and resistance are at 0.07 and 0.105 ringgit. If the price manage to break the current resistance, the highest price of this stock will go on 0.175 in the resistance 2. Otherwise, if the price manage to break the support line, it will go to 0.025 cents. The second one is pattern. In this chart, there is a potential pennant pattern. If the current price break out the potential pennant, the price will go up until 0.145. This prediction is by the price projections project. Okay, last, for the indicator, we use two, which is moving average and relative strength index. The first one is moving average. Zealand PhD show a buy signal on 6 April 2020. In 11 January 2021, our prediction is there may be make a new signal, either buy or sell signal. The second one is relative strength index. The indicator already hit the overbought on 14 September 2020. Their current RSI now is on 50.65. Our predictions is they may be hit the oversold line.
Adjacent Berhad was incorporated on the year 2002 as an investment holding company and listed in the main market of the Bursa Malaysia Security Berhad on the 5 July 2005. The group is the wholly owned as the subsidiaries and the particular involved into the mineral resource trading, engineering and also property development, procurement, and also constructions and the commission, which is called as the EPCC. The current project of the adjacent Berhad first is the adjacent Branch Bay project in the Batu Ferringhi Pulau Pinang. Second is the Penang Central, and third is the adjacent ships the 50,000 of ton river sand a month to the China, which is Hong Kong. We move to the fundamental analysis for the adjacent Berhad that have a two, which is asset structure and also financial structure. Overall, it can be concluded that for the asset structure, the highest of the current asset and also non-current asset is cost in the year 2017, and the average is consists on the 2018. For the financial structure, the highest of the current liability is on the 2017, and for the non-current liability also goes to the 2017. But for the equity, the highest of the financial structure is on the year 2019. We move to the profitability ratio. So as a overall on the profitability ratio, on the return on asset and also return on equity, the higher ratio that consists of the both of the profitability ratio, it show the ability of the company to obtain the given level of the asset and also on equity. So the highest of the ratio on the return on asset is consists on the year 2018, and same goes to the return on equity, which is on 2018 have a higher ratio. Asset management ratio can be concluded as the trade of the turnover ratio shows that the good conditions of the efficiency using the asset, account receivable and management in the inventory is on the year 2017, which is the higher ratio compared to the another 2 years that have been a slightly decrease of 2019 and also 2018. For the capital structure ratio, on the debt perspective, it can be concluded that the year on 2017 having the higher ratio as is was higher debt level and higher risk. And for the time interest, it can be concluded that higher indicator as 2017 is a good condition to the company to make a continued payment obligations in the interest payment. And then earning per share of the adjacent Berhad under the stock market ratio, it shows that the highest ratio that adjacent Berhad earn in the earning per share is on the year 2018, that consists 1.6% rather than to the year 2017 that only consists the highest of 1.37%. But on the 2019 it slightly decreased, which is only consists the 0.72%. Technical analysis for the adjacent Berhad. First, we look at the support and resistance, as the current price on the support of the adjacent Berhad is price 0.125 cent and can be fall until the support tree that price of 0.055 cent. But the current price of the resistance is on the 0.15 and have the potential to raise up until the 0.125 cent. For the pattern, I have analyzed that there is the potential flag pattern on this chart. So if there is the breakout price on the potential flag, the price may be go rise up until the price of 0.220 cent. For the indicator, we use the two of indicator, that is the moving average and also RSI. For the moving average adjacent Berhad, the green color of the circle is the buy signal, which is the price on the 0.075 cent, and the red color of the circle is the signal of a sell, that a price is 0.165 cent. So there is the orange color, that was is the potential, maybe can be a buy or the sell signal. For the RSI indicator, it shows the indicator is still on the line, and if the indicator across the oversold line, it will be the price high.
Based on our analysis, we agreed to choose Hohab Construction Company as this company has shows a good performance compared to the others. Bas- It has biggest market capitalization, growing in asset and financial structure, showing that this company is growing, and it has good profitability ratio, management of asset ratio, a good management of debts. It also has a positive earnings annually, and the technical analysis method on the chart also shows a good sign, and we agreed to choose Ho Hub Construction Company to be invest in this company.
That's all from us. Thank you for listening. Have a nice day.